Welcome back. You're tuned into Market Cafe with me, Ankita Saxena, and with news Kanishka Sarkar. And we're getting you all the updates before the start of D Street today. Let's move on to some Indian macros then. RBI has released its September bulletin and it highlights that the rural demand remains robust and it sees the new GST reforms to improve tax buoyancy, compliance and ease of doing business. Ankur is now joining us with the highlights from the report. Over to you, Ankur.
Yes, it is the first comment which is coming in from Reserve Bank of India, the banking regulator, regarding the recent GST reforms. Bulletin clearly mentions that GST Council's September decisions will address the inverted duty structure as well. And apart from that, it also mentions that big boost for MSMEs and startups. Now, the expectation is that the reforms are expected to improve the tax buoyancy as well as compliance and ease of doing business. Apart from that, there is a mention that equity markets have remained volatile on GST reforms. And as far as U.S. tariffs are concerned, that yes, there is an impact on equity markets on U.S. tariffs as well as the strong GDP data, and therefore the markets have remained volatile in the recent days. Apart from that, talking about the economy, current account deficit has moderated in Q1 FY26, and strong services, exports, and remittances were the reason for that. The bulletin also touches base on rural demand, which is robust, and the higher tractor and as well as two-wheeler sales does reflect upon the same. And unemployment data is also supporting the economy currently, which has fallen to 5.1% in August, and that was led by sharp decline in urban joblessness. And more importantly, the comment on GST's decision are important because it is first time that regulator is making comments after the next-gen GST reforms have been taken in. And more importantly, it is clearly saying that it will lead to lower retail prices, strengthen the consumption growth story for India.
All right. Thanks, Ankur, for taking us through all those highlights. But moving on,